What's up, traders? You know what time it is. Another day, another dollar. String about 30 of them together, and that's that monthly market wrap-up. Before we get started, I want to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So this is going to be the monthly market wrap-up for the sectors of the stock market. We're going to hit our regular 11 plus a little bonus round in there. It's going to be a bit of a rapid fire. If you're interested in the Bitcoin/crypto one, or potentially like gold and other commodities, those will be separate videos. All right, let's jump right in here and see how these sectors are doing. So first we have the XLB, which is material sector. From our Rona lows back here all the way up to the highs, we came down, tagged the 236 fib, dropped below it, didn't quite get down to the 382, had a nice little bounce back up, could not get back above some key resistances here, and then we had temporarily reclaimed the 200s, but we're losing those again. So we're back at that 236 level now, and it looks like we're going to probably lose this level. We have a descending resistance line here on the top. We have a descending support line here on the bottom, and we're basically at the top, just kind of squeezing in between the 236, the 200s, and that resistance. So more likely than not, looks like we're about to let go right here and put in essentially what amounts to a head and shoulders pattern. So we'll just go ahead and slap that little guy on there. We can watch that neckline right around that 236, and we'll see that a measure move break will be essentially the distance from the head down to the neckline. And that would probably just be that test of the 382 that we didn't quite make it down to last time. When we get there, I would expect at least a temporary bounce, but then we'll see what happens. So it does look like it's setting up for about a 12% downside. Or if you're looking to buy support, not nearly as interested in the short itself, you're going to be paying attention to like that 65 level. And that is XLB materials. All right, so next we have XLC communication. So again, we've got that low from the Rona dump. We've got our high right here. We had a very strong uptrend in this green here. We consolidated for a bit, lost support, back tested our 200 exponential and simple. They flipped red right here. We went into a bear market. We talked about how this pattern looked like it was developing into what amounted to an inverted head and shoulders, which is a bullish bottoming pattern. Oftentimes, once you get that head put in, the neck breaks above the 200s. The back test of the 200s is the right shoulder. The shallower or more shallow that right shoulder is relative to the left shoulder, the more bullish it is. So for a minute there, this wasn't looking so hot. And then we were obviously able to reclaim the 200s, flip the slope blue, nice push up, last chance to buy the 200s. And then here we broke through the neckline. And we know, of course, the measure move to the upside is just that right there. So we already made it back to the 382, but it seems more likely we're going to get up here to that next leg, the 236, about 71. And then obviously if we do get this whole big measure move, that essentially just takes us back up to that resistance all the way at the top that we broke down from when the bear market started. So bear market started here. Bull market technically has started here in XLC communication. Now keep in mind also, some of these are heavily weighted by like one or two big stocks. So they're not necessarily an accurate representation of that entire sector. So that is XLC communication. All right, so next we have XLE, and we just did a pretty deep breakdown on this one, so check out the breakdown. But essentially similar situation, but because this didn't put in all-time highs, we're technically still on an internal retrace from 2014. So we had a pretty powerful trend to the upside here. We lost that trend. We had another one from the highs here. It was acting as support. And now the issue is we back tested the breakdown. We come back down, retest the other one, and now it looks like we're losing that level. Now we don't want to give up on this just yet, but we have a descending channel right here. We're right in the middle of it. We're losing some key support. So if and when we do come down lower, we're still looking for the potential fib levels or the descending channel as support, but it does look like we're losing some key levels. And more importantly, when we look at the 200s, we're essentially confirming into a bear market here. So if we do let go at this level, seems more likely than not that we're just going to come down here and retest that 236 about 68. Now it does seem more likely than not that eventually we're going to come down here a little lower as we're breaking down from a key trend and entering into a bear market. But in the meantime, 67 looks likely. And that is XLE Energy. All right, so next we have XLF Financials, currently trading around $32. Again, from our fib low back here, from the Rona dump all the way up to the high, we have a 236 around $34. We broke down from that, retested the 382, got an aggressive move back to the upside. Since then, we've been putting in higher lows, which is okay, but we're essentially just trading inside of this descending channel. So we obviously had an impulse wave to the upside. Now we're in the middle of that correction. We've already come down to the 382 almost once and then all the way a second time. And we have a series of lower highs right here. So it does seem more likely than not that we're either going to push back up and retest the 200s again, try to reclaim those, try to get back out of here, or we're getting rejected. We're about to come back down to that 382. I don't think we stop at 29. Maybe temporarily, but more likely than not, we're coming down here to the 0.5 next. And that's going to line up with the descending channel if we just sort of extend it out here a bit. So for me, it looks like $27 on XLF seems likely. So we'll look for somewhere around there, around the 0.5 and the bottom of the descending channel as some temporary support if and when we do get the breakdown. And that is XLF Financials. All right, so XLI is next, industrial sector. And here we can see from those lows down at 48, came up here and put in an all-time high around 108. Like many assets and sectors, we backtested the pre-Rona dump highs, and we came down once, we came down twice, found support, moved back to the upside. This looked like a W, double bottom right here. We're back on top of the 200s. And this is essentially the line in the sand. If we lose this level, it's going to look like a failed breakout. It's going to look like a failed bull run. And we're probably coming back down to like 85, maybe even lower. If we can hang out here long enough, consolidate for a bit, and get a push back up to the highs, this thing's only about 8% off the highs. And more likely than that, it just continues going parabolic if and when it does continue to the upside. But realistically, as long as we're above this 85 level, it still looks okay. But losing the 200s is not going to be great. And if we really zoom out on this thing, we'll see we've been operating inside this channel for literally decades. So we do have a very, very strong support when and if we come back down to that level. So I think if we come down here quick, we could get to that 382 around 79. But realistically, if we come back down to that level, if it takes a couple weeks, couple months to come back down here, more likely than not, that blue support line is going to act as a final bottom. And if not, and we do break down from what amounts to a multi-decade long support, things are probably getting pretty nasty. Doesn't mean it can't happen, but hypothetically, things are probably in rough shape if the industrials are breaking down like that. And for note, this is one of the strongest sectors as well. So that is XLI Industrials. All right, so next we've got XLK Tech. And from that low down here, obviously this thing has gone parabolic. Once we lost that upward support, the 200s, we confirmed into a bear market, broke down, had an aggressive selling fest come in here. Came down to the 382, didn't quite get to the 0.5. We've got some support down here on the bottom. You could draw it a couple of different ways. We've got some resistance here on top. Once we broke out of that resistance, came back down, back tested it. It lined up perfect with the 200s, found support, and this thing has really shot back up here to retest the highs. Now we had the measure move breakout from the channel. That has basically played out at this point in time. We've basically come back up to the highs. So at this point in time, if we can get back above this level, this thing's ready to rip. But this is sort of the line in the sand as far as resistance goes. That was our key support right here that we broke down from with the distribution that ended up leading to the beginning of the bear market. This was the breakout that started leading us back into the bull market, positive slope on the 200s. And this is essentially the line in the sand. For you guys that have been around here for a while, you know this is where my arch nemesis comes in. That's right, you're in for a treat with a special Easter egg if you're new to the channel, because that's my boy right there, the 886, coming back here to slap me. So we'll see if that 886 is just talk or if this is real action, and we're actually going to put in a lower high right here, top out, and melt back down. Obviously, again, one of the strongest sectors, but it did have a very, very deep retrace as opposed to industrials, which has just held up relatively well the entire time. So if and when this thing does decide to correct, if we can't get through the 886, realistically, we could be looking at a fairly deep retrace. Currently trading at 165. I think coming back down to about 145 would be realistic. Still putting in a series of higher lows and higher highs. It would be perfectly bullish for us to come back down here, get a back test of about 140 to 150. And then we could easily continue on from there or break down and go much lower. But that is XLK Tech. And again, just a reminder, did a breakdown of XLK not that long ago compared to something like the triple Qs. And it's worth keeping in mind that this thing is heavily weighted, top heavy as they come. All right, so next we got XLP, consumer staples. So like the industrials, this has been holding up fairly strong here. Obviously, consumer staples is a recession type play. We had a nice move to the upside, put in our all-time high here. We have our nice little Rona dump to Rona high here, green fib in place. We got the initial push down to the 236. We back tested the breakdown from the highs. We came down then perfectly to the 382 and our buy target. We had this descending channel in place, perfect support. Came all the way back up, retested the highs, broke out, found support on the top of the channel. What was resistance now acting as support. And we got back above the 200s, pushed back up here again. And we had hit this level here. We hit it here, here, and here. And we could not get through it, surprisingly enough. But we are still putting in a series of higher lows. So even though we have technically broken down from this little ascending support in white and we have lost the 200s, it does look a little bit sketchy. But as long as we're putting in higher lows here, realistically, we might just be refueling for a pushback up here. So this one is literally teetering on the edge. I don't know what's going to happen here with consumer staples, but our next target to the upside is 77. And if we do come back up there, more realistically than not, we're probably going to break out. But if we take out this low right here, realistically, that's going to mean we're coming back down here to try to retest those macro lows at the 382 around $66. And below that, we have the pre-Rona highs right here in yellow that we'd never quite made it to at 65. So this one could go either way. As far as I'm concerned for now, it looks like most of the reward is to the downside with about 10.5%, 8.5% to the targets there, or back to the top is about 6%. I just don't see a real tradable setup here. But again, one of the more bullish sectors and also a safety sector for all those recession/depression people out there. And that is XLP, consumer staples. All right, so next we have XLRE. So from our Rona dump here to the highs, we had started to put in a nice little head and shoulders pattern here. Talked about shorting that right shoulder. Obviously that played out real nicely. The initial move back to the neckline and the first target was 12%. The second target was down here at 20% for a back test of the 382 fib level from the lows to highs. After that, we got a push back to the upside. That was our take profit there. And obviously you could add a third trade setup that took us way, way lower because I was expecting the 382s. Not only did we clear the 0.5, but we got almost a perfect touch on the 618. So we came down to the 618, went back to the 382, found support at the 0.5, almost went back up to the 236, couldn't get above that pre-Rona high right here. So relatively, we can see how weak this is compared to a lot of other sectors that are still substantially above that level. So here we are consolidating at the 0.5. We back tested the 200s multiple times. They're still very much sloped to the downside. We do technically have some higher lows right here, so we can kind of be managing risk off these levels. But to tell you the truth, they don't look strong. And if we do get an overall flush or breakdown in the market, or specifically in real estate, we're probably coming down to new lows because we almost touched at 618 but didn't quite get there at 33 bucks. If we sweep those lows and this thing really decides to let go, if we really do have this real estate crash like everybody's calling for, expecting, predicting, whatever, we're talking about maybe 29. But one of the weakest sectors, and definitely want to stay away from XLRE. At least you did. Who knows? Maybe now it's about to go to the moon. All right, so next we have XLU utilities. So this thing has been trading inside this green channel for literally decades, operating in the bottom of the channel, broke out to new highs. We have from the low down here to the high right here. We came down to the 382. We lost the channel support. We reclaimed it. Couldn't get above that previous high resistance level here in yellow. Couldn't get above it on the next bounce either. Reclaimed the channel, or at least tried to, but it just didn't happen after that. So now we have a series of lower highs. We're technically putting in higher lows, but we're starting to lose the slope line on these other higher lows. So maybe we're looking at something like this. It's hanging on for now, but losing this channel after literally decades is a big deal. Last time that happened, we had essentially a capitulation move. So we already cleared the 382. The measure move of the breakdown of the channel would take us down to the 0.5 at 58, the 618 at 55, or technically somewhere around the 786, closer to like 50 bucks. And again, this is typically like your safety sector. So people run to this when they're scared. Obviously, it's been a little bit more risk on lately with some of the more speculative stuff. So if that does decide to switch back the other way, maybe this thing reclaims the channel. But right now it is not looking good. I don't like to see this thing operating out of an area it's been in for literally decades. Still holding up much better than most sectors in the markets, but definitely in the danger zone now. So can the bulls step back up here? Or will people get scared enough that they get back into it? We'll have to wait and see. Obviously, we have a little triangle pattern here. So a break in either direction is probably going to be fairly aggressive. And that is XLU utilities. All right, so we're getting close to the end. Next, we've got XLY, consumer discretionary. So typically, this does not do as well in recessions and stuff like that. Consumer staples been holding up much, much nicer as you would expect as we were positioned. We see from the Rona low here to the Rona high. We came down initially kind of just melted down in this channel. We lost the 200s. We're trying to reclaim them and flip them back over blue again. We see the slope here flipped red, bear market, and now we're trying to flip them back blue for a bull market. We did come down to the macro 0.5 here, and then from that level got a nice bounce back to the 382. In this case, we have also in place our orange fib here, and that is from the high to the low right here. So we retested the 236, got on top, hit the 382, back tested the 236. Now we're moving up here, and I'm looking for a trade setup that's going to take me up to the next orange fib at the 0.5. We also broke out of the descending channel. We came back tested it. It held. We're back on top of the 200s. Looks like it wants to push up to the heart line to the 0.5 for like a 10.5% move to the upside. So if we put our stop below that 236, that gives us about a 4.3% stop loss with a 2.5 risk reward ratio for the 0.5. If we get up here to the 618 and backtest the red 236, that's going to give us about an 18% upside and risk reward of 4%. If this thing really goes crazy, we stay inside this ascending channel and we finally get that push back up to the 786. Much less likely, it's definitely going to take some stars aligning, but that's going to give us a 6.5 risk reward ratio and 28% to the upside. And again, we know that the XLY from the video we did recently, deep dive on this bad boy, is very top heavy, which could be a good thing or a bad thing. But regardless, we don't know exactly what's going to happen in the markets. But the most important thing is just understanding what you are investing in. And that is the XLY consumer discretionary. All right, so next we've got the XTN. So from our Rona low here to our macro high, we were in this ascending channel. We were in a bull market, ripped to the upside, came up here, and now we started threatening the 200s, flipped them bearish, break down. We came down, almost got to the 0.5, but we touched the 382 a bunch of times. That's also the pre-Rona high is actually a little bit lower. This is technically the 2018 high, but this little area right here is worth watching because there's a ton of support through there. And obviously we had this descending broadening wedge. We came down, higher low, broke out, came back, threatened that previous high here, came back down again, higher low once again, found support at that 2018 level again. And now here we are looking like we're setting up for transportation for a move back to the upside. So we have this little trade set up in place. It's not really viable if we only get a push back to the 0.5. That's 9.7%, 6.5% stop loss. So basically no use to us. Now, if we clear the 0.5, we get up to the 618, which we already made it to once. That's 16% from where we're at now, 6.5% stop loss. That's 2.5 to 1 risk reward ratio, and we're at the 200. So we're basically neutral bearish. And then realistically, if we get back up to the 618, not once, twice, but a third time we retest that same level here, we would expect it to go to the 786, and that gives us our last trade set up 25% upside and a 3.88 to 1 risk reward ratio. So the truth is, on this one, the percentages and the risk reward ratios just aren't great, even though the setup is there. So if you're like me and you don't have unlimited capital, maybe we want to focus in on a different sector. So XTN is looking okay for now, but this thing could easily get nasty if we break down from this level. And realistically, that puts us at the 0.5, closer to like 60 bucks. So we're trading at 72 right now, essentially looking at about a 15 or 20% down move. And we do not want to eat that just buying in here and hodling and hoping it goes higher. So for me, this one is a no-go. So even though we have some decent setups on this one, I think there's a lot of other stuff out there that provides better opportunity. So that is XTN Transportation. And last but not least, I know it's not technically a sector, but we're looking at the semiconductors, XSD. So here's our Rona low. We come up here, put in our high. It was looking like we were developing into a little slanted neckline, head and shoulders, came back down, put in the lower low at that neckline, but did not break down from there. And it was important for us to recognize that sometimes the pattern's not going to play out. We came back up again, and that's when obviously we wrote it off. Got long on NVIDIA and some other semiconductor names. Once we started reclaiming the 200 exponential and simple, slope those to the upside, got a push up here, came back down. We have a series of higher lows. We have a series of higher highs. And now here we are threatening that previous high. So while we're having a short-term pullback right now, this is again one of the most bullish sectors. It had a fairly deep retrace, and now we're having an aggressive move back to the upside. 786 is right above our heads. And if we take that out, the truth is, we're probably going to be revisiting the previous all-time high. And while it may take a little bit to get through that, we'll be a couple percentage off of a blue sky breakout. Should we get back up to 251, I'll be very, very bullish on a breakout. But if we do end up putting in a lower high right here, I'm going to be very skeptical of what this macro pattern could start looking like. So still bullish for now, definitely one of the aggressive sectors, but also very important to pay attention to because we saw this exact same setup as well. And in this case, it did not break to the downside. And in the other case, it did. So it is important to realize that it's all about probabilities, not certainties. No matter how beautiful a pattern is, no matter how nice a setup looks, they can always fail. Which is why it's so important for us to focus on all three pillars of trading and investing. We need to have proper position sizing. We need to have favorable risk reward based on trend. 2-to-1 if we're trading with the trend, 3-to-1 or more if we're trading against it. And of course, by trading with the trend, that's going to give us the highest probability of success. And the truth is, if you do all three of those things, you have your edge. On a long enough time frame, you will win. As long as you stay disciplined and keep yourself accountable. Keep your emotions in check and stick to your proven system. So that is XSD Semiconductors. That is our monthly market wrap up. If you found any value in this video, please make sure to like and subscribe. Leave me a comment down below. And make sure to check out the crypto and commodity monthly market wrap-up videos as well. One more reminder, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Crypto Trend Trader, and I'll catch you on the flip side.